we're seeing demand pick right back up. Hasn't translated into rising premiums. In fact, we're updating our prices right now, and they're still on their way slightly down. So honestly, the best premium I've seen since 2020, not even close, across the board on everything, with the exception, once again, of Silver Eagles.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And once again, it is fortunately that time of the week where we dig into the physical silver world with Andy Schectman of Miles Franklin, find out what's going on with the premiums and the availability of products and anything else of note in the silver world. So, Andy, great to have you on here today. And sorry about your Vikings over the weekend. I know that was a tough one you're still recovering from, but aside from that, how is everything going?
Yeah, it was a bummer. I'm used to it now. It just disappoints you every single year, but it's all good, buddy. There's always next year. I'm good. I'm good. I hope you are too.
Well, doing well, and you're a step ahead of the Jets, so there's always that to be grateful for. And but in either case, enough football talk. Everybody wants to hear the latest on the silver world. And again, as we've talked about the past couple of weeks, extending from last year, premiums down a little bit, and seems like order flow is starting to pick up a little bit in the week or two since the year began. But since we last talked, what is going on in the silver premium world?
It's really quite fascinating. I have done this for over 3 decades. I've never seen premiums escalate the way they did as fast as they did over the last 3 years. And conversely, I have never seen them retreat the way they have, as fast as they have right now. And I try to make sense of it. I've talked to a lot of people, and they all say the same thing. They've never seen really quite anything like it. And, I guess when you look at the mainstream public, who virtually has zero allocation to precious metals right now, zero, it's a situation of supply and demand. And there was a definite, almost like a switch was turned off in November. It's interesting, though, premiums are still coming down, yet literally since right after the first of the year, we're trending right back up again with volume reminiscent of what we've seen over the last couple of years. So I don't think this is anything in terms of it being substantive or a new trend. I mean, it certainly is eye-opening and shocking how fast they've come down, to what degree they've come down. There are still some things that haven't come down, like the American Eagle, which is still, roughly $9 over the price of silver. But just about everything else, from the other 5 sovereign mints to the bars, 10-ounce, 100-ounce, the 1-ounce rounds, have all become really, really, really affordable. And I struggle to find out, not only from the people I know, but just scratching my head, what's going on. And I don't really have a great answer for you other than what we've talked about. I think the holidays certainly represented a time for people to shut off their computer, get out, and not think about their finances or precious metals. But here we are after the new year, and people are starting to recalibrate and refocus, and we're seeing demand pick right back up. Hasn't translated into rising premiums. In fact, we're updating our prices right now, and they're still on their way slightly down. So honestly, the best premium I've seen since 2020, not even close, across the board on everything, with the exception, once again, of Silver Eagles.
Yeah, and so most of the people who call in, are they generally looking for whatever is the lowest premium over spot? Are people sensitive and wanting particular products right now? Obviously, there's the segment of the market that does like the Eagles and just goes for them no matter what the conditions are. But the majority of people generally just looking to add whatever comes at the best rate. And what are the lowest premiums on a good silver product right now as well?
Yeah, for the past 2 years, I've begged everyone to buy bars, 10-ounce, kilo, 100-ounce, because the sovereign mint coins have just been stupid as a reflection of historical reference. They've come down to levels right now that are not too far off of where they were in 2019. Everything but the Eagle, the Maple, the Philharmonic, the Kangaroo, the Krugerrand, and the Britannia. and not too far off of the prices of bars. My go-to spot for the past 2 years has been Valcambi Kilo, Valcambi 10, Valcambi 100, Royal Canadian Mint 100. They have consistently been the best value in a world of stupid high premiums. I would say that the five mints, again, this is an indictment against the US Mint. Why is it that I can get coins imported from Australia, the United Kingdom, Austria, and South Africa, have them shipped all the way across the Atlantic Ocean, and offer them to the public for roughly $6 less, roughly, than the American Eagle, which is made here in the United States in New York and West Point, New York. It's very difficult for me, once again, to continue, even as a U.S. Mint authorized reseller, an honor I'm supremely proud of, to recommend people buy the American Eagle, if not for some sort of a reason that is detached from value. And there are reasons. Some people feel that it's the safest place. Some people feel that, like Jim Sinclair has publicly talked about, if there were ever confiscation, again, it would be his belief that American minted items would be safe from that. I know Bill Holter feels that way as well. And, hey, maybe there's your reason to do it. But when you're talking value, yeah, it's not found in the American Eagle. It's found in 10-ounce, kilo, and 100-ounce bars. And maybe for the first time since right before the pandemic, you're actually finding decent values in the five coins, as I mentioned: Britannia, Philharmonic, Kangaroo, Krugerrand, and what else? Maple Leaf. Even the Maple Leaf has come back down to reasonable premiums.
And what's the difference in premium between some of the sovereigns and 10 or 100-ounce bar right now?
Maybe a buck. And for the better part of the last year, two, it's been 3, 4, even sometimes $5. So $1 or less, depending upon what bars you're getting and what conditions, and are they assorted or are they name brand. But look, if someone's looking for the biggest bang for the buck right now, it's going to be in a bar, but it's not that far off, not more than 3, 4, 5% max, maybe 6% higher than some of the bars, or the sovereign coins will be 4 to 6% higher than the bars. They've been 2 to 3 times that over the last few years.
Yeah, and something that comes up that I guess doesn't get as much attention, but on the sellback side, which I get the feeling doesn't happen quite as often, but I do get those questions of how do people actually sell their metals? What is the liquidity like in terms of selling back bars? And also, if we reach a point where things are chaotic, I know people wonder how do they, if they do for whatever reason choose to want to sell, how they cash them in, and anything you could add on that half of the market.
The liquidity is fantastic, and selling bars back is not a problem, or coins. Not, I mean, the process is buying it in reverse. You lock it in. We can help you ship it back with a UPS air bill that we send you with insurance attached to it, or show you how to do it safely by registered and insured mail. That's easy. The part that's difficult, I think, for people to understand is the premium. And this is a very interesting topic. It's a topic that we could have. I know we had talked about doing a podcast here maybe next week or later this week, Chris, and it's a topic really that deserves a good amount of time. The moral of the story is, for the past 2 years, maybe almost 3, anyone in my position has had to secure product anywhere from 6 to 12 weeks out in order to get delivery, because the larger companies are competing for a very small supply of metal over the last few years with high premiums. And as an example, the Kangaroos that we purchased, in late November, where premiums were substantially higher. And so, this is the risk that the dealers face when they're buying stuff well in advance because of supply chain problems at high premiums. And then all of a sudden, bang, premiums drop right around the holidays before those Kangaroos were even delivered, selling them at a net loss right now. And, you can't hedge the premium. And so what this really manifests itself in, or as, is a larger spread for the dealers between buy and sell, because they're a little bit nervous when premiums are much higher on the ask side, and they're volatile, and we're not sure what happens tomorrow. So all those people out there who think, yeah, the dealers have been making a lot of money and on these premiums and whatnot, and it's a notch above the retailers. It's the primary distributors who are the ones who have the contracts with all of the sovereign mints. And when you're making a promise to pay $6 over for Maple Leafs that are now being sold for 4, that's more profit than anyone makes in this industry. You don't make that kind of profit selling silver. And so all of a sudden you've lost $2 right off the bat on everything you're selling in order to remain competitive. So I guess really what I'm getting at is that yes, you're still going to get a premium above. And I think as the ask premium drops, the spread will narrow. But we've seen large spreads over the last year or so on these coins because the premiums kept going higher and higher and higher. We had to pay more and more and more. And as you have that premium exposure on your balance sheet, you're not able to hedge it. Just the metal content. If I buy 1,000,000 coins with $6 premium, that's $6 million that I can't hedge, but I can hedge the metal. So it's just a situation where, look, it's very easy to sell the stuff back. It's just as easy as buying it. It's very safe. You're going to always get, at least in my experience, over spot on almost everything you're going to buy. But it's difficult to pinpoint it in an environment where you have schizophrenia in the premium market. It's making it hard for dealers to get their hands wrapped around it. So I guess we'll see. But it's not a problem, and people should never worry about liquidity. In fact, I'd argue it's more liquid than just about anything else, because the minute we get it, we send a wire. So it's very, very liquid.
Yeah, and one thing I wanted to ask you about was, are the delays in the product availability that you've talked about today and a couple of times in the past, have those gotten back to normal yet, or is it still longer than average lead times?
Yeah, you know what's really interesting, Chris, and I expect the delays to come back again. I expect shortages to come back again because, look, you got the LBMA saying that if the unprecedented net outflows of silver are like they were in 2022, they can't handle it in 2023. They'll run out of supply. When you watch the drawdown on COMEX, you can't continue to watch the supply being drawn down on the registered category and expect that the refiners and the people who are accumulating these bars to make coins from either the LBMA or from the COMEX will be able to readily get them. When you see the biggest money in the world drawing this stuff down from the top on down, it doesn't resonate with me that stuff is so available right now. It just seems kind of like a sweet spot. Like, the 2023 stuff came in, business slowed down. The retail environment is better liquefied, has better product availability than the LBMA and the COMEX do in theory, in terms of what I look at now as a snapshot, because all I keep seeing are drawdowns from the largest exchanges in the world and deliveries. I was listening to Rafi just the other day, and he's talking about the amount of gold that was delivered off of the exchange just in the last few days. 1,223 contracts last week on January 11th, and another 505 gold contracts. You're talking $330 million worth of gold in the last week has been delivered off of COMEX quietly. And last week alone, when you talk about the amount of silver outflows from the ETFs, from the exchanges, all of the Western ETFs and exchanges, you're talking almost 9.5 million ounces of silver quietly exiting stage left. It's continuing. So when you talk about the top on down being bled dry of supply in both gold and silver very quietly, where you have to literally go to extraordinary lengths to find the information that tells you how much silver and gold are being delivered off the exchanges, it just tells me that when we look at supply right now, it's a snapshot. And if I had to guess, it goes back to what we've seen the last 2 or 3 years, because where else does it come from if the major epicenter of supply is being drawn down? At what point, not only that, but the geologic supply is being drawn down with the 7-to-1 ratio priced at 80-to-1. And every macro perspective you look at it, the way that you look at it from a macro perspective right now doesn't make sense. Lowering premiums and immediate availability, yet everything from the above us, it's the opposite of that. It's being drawn down, it's disappearing. And I don't know. I think at some point, supply has and not only supply retail and wholesale, but also the geologic supply has to find some sort of symmetry with price. And that's why it's so easy for me to say it's the most undervalued asset in the world, silver. I mean, from every single metric that I can see, other than a little bit of an anomaly right now with low premiums and good availability for the first time in roughly 36 months, it just screams that this is the opportunity, the value that isn't to be found anywhere else. Anywhere. I look all around for good value. And the fact that you have less than a 1% allocation to silver in the whole US financial matrix is just, it's shameful to the financial advisories. And, you know, here you are pounding the table for the last several years in a market that has been ignored by the mainstream, yet the really sophisticated money is taking it hand over fist. And a country like India takes 300 million ounces last year in deliveries. That's about how much is backing the entire COMEX universe, of which the majority of that amount is not for sale. 1/10 of it is for sale right now. The other 90% in the eligible category are in strong hands. And who knows how much, if any, of that is really available to be sold, if indeed there's enough demand.
Yeah, that's certainly, in my opinion, one of the things to keep an eye on this year, and we'll see what happens with India, and again, also with the registered stockpile on the COMEX and LBMA as well, where at least in December, it looks like their LBMA stockpile stayed about flat. So we'll see if that decline picks up there again going forward. Last one I wanted to ask you, though, was back to the gold side. Are you surprised that we see $1,915, $1,920 gold while the Fed is still raising rates? I mean, it's almost, especially after what we saw last year during the hikes and the gold and silver prices got clobbered in the summer. I just keep thinking about that. I know it's happened quickly and there's been a significant rally in the past couple months, yet just curious, any thoughts you have on the $1,900+ gold while the Fed is still hiking and talking about hiking more?
Yeah, I think, first of all, from a technical standpoint, last week we saw the golden cross in gold, where the 50 and the 200-day moving average crossed to the upside. That's an incredibly bullish sign, and half of the world acts on technical analysis. I also think that when you see the yuan strengthening against the dollar, you know, China doesn't care about rising rates here. They don't care about especially in the face of a yuan strengthening against the dollar. They just want the gold and they don't care. They just give me the damn gold. I don't care. I think their aspirations are bigger, much bigger. Look, I think this is interesting for people to understand when we try to talk about perception, right? And perception is reality. And if you have enough money, certainly, you know, when we talk about the 100-ounce gold contract, which is worth roughly $190,000+, you only need $6,900 in your margin account to control that, right? So this is why it's been so easy for the big banks to be on the short side of gold, because all you need is $6,900 in your margin account, and you can go short or go long a gold contract, which controls almost, well, 27 plus times. And so we've seen major distortions. But in a world where the demand is such that 400 tons get delivered in one quarter outside the COMEX and the LBMA, I think there are a lot of banks that are realizing, the big commercial banks, that being on the short side of this is very, very, very dangerous. And I think what it is basically saying is, look, when you see one whale take possession of 1,223 contracts worth $229 million in one day, that should tell you that the biggest money in the world is, they don't care what is happening with rates or on the periphery. They've been using the last few years suppression of the metal to reposition, to massively accumulate it. So no, I'm not surprised at all. In fact, I think it's long overdue. gold and silver have been distorted, maybe the only assets that have been distorted to the downside in an era of massively and unprecedented overvalued asset prices where price discovery is impossible. And maybe, just maybe, what we are seeing is some sort of attempt at finding an equilibrium here. Look, at the end of the story, the little boy does see the wolf. The wolf does come, and one of these days, that's going to happen. And when you see the amount of gold that the whole world is accumulating, to try and hold that back, even with the ability to have 100 or 27 times leverage right now, is a big problem. I think that you're seeing the biggest players in the world move to accumulate gold and get away from suppressing the price in a concentrated fashion. So no, I think we'll see very easily. I think we'll see the highs of last year challenged, and I wouldn't be surprised to see it here really soon. In fact, maybe even this month. Sure appears that way, maybe into March, but sure appears that way. When you break through that 50 and 200 day, that golden cross, from a technical standard, you couldn't ask for a more bullish fundamental technical pattern. And when you look at all the things that are happening together, maybe we're going to see the big funds dip their toe in and start to go long as well. So no, I'm not surprised at all.
Well, sure will be interesting to see how that plays out this year, and especially if we do get some sort of Fed pause or pivot. It'd be interesting how that shakes out from the current levels. So
I think we will, and that's why I don't think inflation has peaked at all. That's, I think the world thinks, or a lot of people think inflation has peaked. Well, first of all, we're not going anywhere near 2%, but the bond traders are already telling you, with this massive inversion in the yield curve, that they expect it they expect them to pivot, and at that point usher in a whole new round of inflation. I don't think really I think the soft landing nonsense is it's dumb. It's dumb that we see a rally in the stock market, and people think so short term. You need to take a step back and have a bigger macro perspective here. So the short term noise, tune it out, tune out the periphery and look at the big picture. The big picture shows a continuing de-dollarization across the globe. And the big money is using the rallies in stocks, the insiders, to sell and to get out. And the public, as always, will be left holding the bag. And yet here is gold and silver, while they are outperforming all the major indices and have for the last year, gaining or getting very little attention. So much so that we see the best premiums in 3 years. And we'll wake up one day to see a whole new shift in the way people look at gold and silver. We're not there yet, but I suspect this is why the big money is front running that type of an outcome. And look, when you take money off the LBMA or off the COMEX, you're sophisticated as hell. And you know that, how hard it was to try to take possession of a contract. We spent forever trying to do it. And granted, it was through a third party, but the point of it is that you have to be sophisticated and well-funded and well-informed in order to do it. And yet we see incredibly large drawdowns by the most sophisticated, well-funded, well-informed private traders on the globe. Let that be your signpost, your guidepost to where we're going. Tune everything else out. And I think that's really the way I try and look at things right now, because the whole world is a mess and confusing.
Well, that certainly does seem to be the case on some days reading the news. And either way, in wrapping up, if people are looking to purchase silver, anything on special this week that you could offer for people who are interested in that?
Yeah, we have some assorted 10-ounce silver bars that they're various brands, but they'll all be very nice at $2.25 over the price of silver, $2.25. That is 100% the lowest that I have sold anything silver related other than 1,000-ounce bars for over 3 years. And I bought 5,000 of them, and they just came in yesterday, I believe. So there's a lot of bars. They're available for immediate delivery, and $2.25 over. Honest to God, that's the best price I've uttered to anyone in the better part of 36 months.
Well, appreciate that. And if people are interested, they can contact Arcadia at Miles Franklin. Of course, with any questions or Anything else regarding silver, welcome to send an email there and you will get taken care of. So, Andy, appreciate you making some time to join me again this week. And
Always.
always interesting times in the silver world. So, who knows what will happen by next week, but we'll look forward to seeing you again then. And you take care of yourself, and we'll check in with you soon.
You stay well, brother. Thank you.